Everyone wants to buy a house. The dream, right? White picket fence, your own place, building equity. But here's the problem. Most people can't actually afford it. They think they can, but the math, the math is brutal. So today, I'm going to show you exactly what it takes to afford a $300,000 house in 2026. And I'm warning you right now, you're probably not going to like what you hear. But you need to hear it, because the banks, the real estate agents, they're going to lie to you. I'm not. Let's break it down. Chapter 1. The lie they tell you. Here's what they tell you. You can afford a house if the monthly payment is 28% of your gross income. Sounds reasonable, right? Wrong. That's the lie that keeps people house poor for 30 years. Let me show you what they don't tell you. A $300,000 house doesn't cost $300,000. Not even close. First, you need a down payment. Let's say you're doing an FHA loan, the easy option. That's 3.5% down. 3.5% of $300,000, $10,500. But wait, you also need closing costs. That's another 2 to 5% of the purchase price. Let's call it 3%. That's $9,000. So before you even own the house, you need $19,500 in cash. And that's the easy way. If you're doing a conventional loan, 20% down. That's $60,000 plus $9,000 in closing costs. $69,000 just to get the keys. But let's say you do the FHA route. $10,500 down. Now you owe $289,500. What's your monthly payment? This is where it gets brutal. Chapter 2. The real monthly cost. Interest rates in 2026, let's say 7%. $289,500 loan at 7% for 30 years. Your payment, $1,926 a month. That's not too bad, you're thinking. Hold on, that's just the mortgage. Now add property taxes. Average in the US, about 1.1% of home value per year. That's $3,300 a year. $275 a month. Homeowners insurance, average $1,500 a year. $125 a month. PMI, because you didn't put 20% down, that's another 0.5 to 1% of the loan annually. Let's call it $1,500 a year. $125 a month. HOA fees, if your neighborhood has one, let's say $100 a month. And maintenance. The rule of thumb, 1% of home value per year. That's $3,000 a year. $250 a month. Let me add this up for you. Mortgage, $1,926. Property tax, $275. Insurance, $125. PMI, $125. $100. Maintenance, $250. Total monthly cost, $2,801. Not $1,926. $2,801. And that's assuming nothing breaks. New roof, $10,000. Water heater dies, $1,500. HVAC system fails, $5,000. These aren't ifs, these are whens. So the real cost of that $300,000 house? About $3,000 a month. Minimum. Now let me show you what income you actually need to afford this. Chapter 3. The income requirement. Financial advisors say, don't spend more than 28% of your gross income on housing. Some say 30%, some say 25%. Let's use 28%. If your total housing cost is $3,000 a month, that's $36,000 a year. Divide by 0.28. You need a gross income of $128,571 per year. Rounded up, you need to make $130,000 a year. That's what it takes to comfortably afford a $300,000 house. $130,000 a year. Now let me show you why most people can't do this. The median household income in America, $74,580. You need almost double the median income to afford a median priced house. That's the math. That's why it's brutal. But here's where it gets even worse. That $130,000, that's gross income. After taxes, $130,000. Gross becomes about $95,000 take home. Depending on your state, $95,000 take home divided by 12 months, $7,917 per month. Your house costs $3,000. That leaves you $4,917 for everything else. Car payment, $500. Car insurance, $150. Gas, $200. Groceries, $600. Utilities, $200. Phone, $100. Internet, $80. Student loans, $300. Health insurance, $300. Retirement savings, $500. Emergency fund, $200. That's $3,130. You have $1,787 left for everything else. Clothes, entertainment, vacations, repairs, medical bills, literally anything unexpected. $1,787. And this is at $130,000 a year. If you make less than that, you're house poor. Every month is a struggle. One car repair, one medical bill, one emergency, and you're drowning. That's what they don't tell you when they say you can afford it. Chapter 4, who's actually buying? So if you need $130,000 to comfortably afford a $300,000 house, who's actually buying these houses? Great question. Let me tell you who. Option 1, dual income couples. 2 people making $65,000 each. Combined $130,000. They can do it. Option 2, high earners. Software engineers, doctors, lawyers, finance people making $130,000 plus. They can do it. Option 3, people with family money. Parents give them the down payment, or they inherit a house and sell it. They can do it. Option 4, people stretching beyond their means. They think they can afford it. They can't, but the bank approves them anyway. Because banks don't care if you're house poor. They get paid either way. And option 5, investors. People with cash. Buying properties, renting them out. They're not living in them. They're profiting from them. So who's buying houses? Not average single people making $60,000 a year. Not young couples making $80,000 combined. Not first-time buyers with $10,000 saved. The math doesn't work for them. And that's the brutal truth. The American dream of homeownership, it requires an income that most Americans don't have. That's why homeownership rates are falling. That's why people are renting longer. That's why millennials and Gen Z are priced out. It's not because they're not trying hard enough. It's because the math doesn't work. Chapter 5, the hidden truth about renting vs buying. But renting is throwing money away. I hear this all the time, and it's partially wrong. Let me show you something nobody talks about. Remember that $3,000 monthly cost to own? Let's compare it to renting the same house. Rent for a $300,000 house? Probably $2,000, $2,200 a month. Let's say $2,000. See, you're saving $1,000 by renting. Not exactly, because when you rent, you're not paying property taxes, insurance, maintenance, HOA, PMI. The landlord pays all that. You pay $2,000. That's it. When you own, you pay $3,000. Plus, you're on the hook for every repair. Roof leaks? Your problem. Foundation cracks? Your problem. Termites? Your problem. When you rent, roof leaks? Landlord's problem. Now, yes, when you own, you're building equity. After 30 years, you own the house. But here's what they don't tell you. In the first 10 years of a mortgage, most of your payment goes to interest, not principal. Year 1 of that mortgage, you pay $23,112 a year. Only $3,079 goes to principal. The rest, $20,033 to the bank. You're throwing away $20,000 to the bank every year. But nobody calls that throwing money away. So let's do the honest comparison. Renting, $2,000 divided by month equals $24,000 divided by year. Owning $3,000 divided by month equals $36,000 divided by year, of which $20,000 is interest in year one, difference $12,000. If you rented and invested that $12,000 over 30 years at 8% return, you'd have $1.5 million. Plus, you kept your mobility. You can move for a better job. You can relocate if life changes. You're not tied to one property. I'm not saying renting is always better. I'm saying the math isn't as simple as buying is always the answer. Sometimes renting is the smarter financial move, especially if you can't actually afford the house. Section 6. So what do you do? All right, so what's the actual solution? Do you just give up on home ownership? No, but you need to be honest with yourself. Here's what you need to do. Step 1, figure out what you actually need to make. Use this formula. Take the monthly cost of the house, including all expenses, multiply by 12, divide by 0.28. That's your minimum income. For a $300,000 house, $130,000. For a $200,000 house, $85,000. For a $400,000 house, $171,000. Do the math for your market. Step 2, if you don't make that much yet, either increase your income first, or buy a cheaper house, or keep renting and investing the difference. Don't stretch yourself thin trying to keep up. Step 3, save a real down payment. Not 3.5%, not 5%, 20%. Why? No PMI, lower payment, lower risk. For a $300,000 house, that's $60,000. Plus closing costs, $69,000 total. That's impossible, is it? If you make $130,000 a year and you save 20% of your income, that's $26,000 a year. In 2.5 years, you have your down payment. But I don't make $130,000. Then you're not ready for a $300,000 house. And that's okay. Step 4, stop listening to people who profit from you buying. Real estate agents, they make commission when you buy. Lenders, they make money when you borrow. Your broke friend who bought a house they can't afford, they want you to be miserable with them. Listen to the math. The math doesn't lie. The math doesn't care about your feelings. The math tells you if you can actually afford it. And for most people, the answer is no, not yet. But that doesn't mean never. It means build your income, save aggressively, buy when you're ready. Not when the bank says you can, not when society pressures you. When the math says you can, that's how you win. So let me recap. To afford a $300,000 house in 2026, you need $130,000 annual income, $60,000, $70,000 saved for down payment and closing costs, and room in your budget for $3,000 month in housing costs. That's the brutal truth. Can you do it with less? Yes. Will you be stressed every month? Also yes. My advice, be honest with yourself. Run the numbers. If you can't comfortably afford it, wait. Rent, save, invest, increase your income. Buy when you're ready, not when you're desperate to stop throwing money away on rent. Because going house poor, that's throwing your entire life away. And that's way worse than renting. I've put together a calculator in the description. Plug in your numbers and see what you can actually afford. No BS, just math. And if this video saved you from making a $300,000 mistake, share it with someone else who needs to hear it. See you in the next one.